This simple strategy that I'm about to show you in this video, okay, it's not a simple strategy, but it's a good one. So this scalping strategy that I'm going to show you in this particular video can help you flip any small account of your choice, trading only the US indices, that is Nasdaq, Us30 for me, and you can also use it on the S&P 500 or the Russell. And I actually do use it here and there when I want to flip up a small account like I did right over here. Us30 was having a better setup than a Nasdaq, right? And you know that if it's a scalping strategy, you're going to go all out on the account, and that is what I did. You can see that I placed like over 10 trades. How many trades do I have running over here? I actually just kept clicking on the buy button. Click to buy. When you're scalping, you want to use large lot sizes and you want to go into the market for a short period of time and quickly exit, going in and out of the market. I did not even stay for an hour in this trade. An hour is even too long when you are scalping. Start off with a $100 account, then I ended up doubling it to $200 and closed my trades when I was done scalping. You can do that on any account size of your choice, and I'm about to explain this strategy to you guys, but just make sure you pay attention to every single thing that I'm saying so that you are not confused. And if you don't understand this, go over the video over and over again until you actually get the concept, right? And if you haven't heard already, I have launched the CTG Elite program, which is going to be so much fun because we're going to be live trading, and currently I have 2 spots remaining, right? And this includes one-on-one strategy calls. We are going to be live trading back to back, you know what I'm saying? And it also includes free lifetime access to the inner circle and to the current mentorship group. We're going to be having strategy calls and obviously weekly group calls and a lot more. So if you have not yet signed up, okay, I can only take 2 people now. Just make sure that you click the link in the description below and go and apply for your spot. And also, before we get into the exciting part of the video, if you are new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? Now let's just talk about this simple strategy. Okay, it's not simple. All right, now, beautiful traders, all jokes aside, before you actually want to attempt this strategy, you should understand what scalping is. A trading strategy that involves entering and exiting positions quickly to capitalize on price fluctuations, right? And in my opinion, I think scalping should be mostly used in highly liquid markets like the stock markets and the indices market, right? Because here you can get enough volatility to actually just scalp up and down and exit real quick. So when you're scalping, there's a potential of having high returns, and you should not forget that you could also lose your money if you are not careful. The reason why I actually like scalping most of the time is because there is a lot of flexibility when you're scalping. You can scalp in any market condition. You can scalp in a ranging market, an uptrending market, a downtrending market. You can scalp in any market conditions, like literally. So I'm going to be showing you how I entered the trade, explaining each and every single detail that you should be looking out of when you are using this particular strategy. So the first things first, make sure you know what time the New York session opens. In my time zone, it opens at 5 o'clock. So the only time frames that we're using in this scalping strategy is the 15-minute time frame and the 5-minute time frame. So this is 1645 candlestick, as you can see, but you want the 5 o'clock candle, right? So when the 5 o'clock candlestick forms like this, and you can already see that the sellers are in control of this market. Let me just mark the movement that it has given us. You can see such an impulsive move over here. And the market, like I always say, never moves like tap water, right? There is not a day in your life that you're ever going to see the market just dropping with straight candlesticks like that. No, it has to actually just retrace a little bit, right? Like this. Let me show you. Then keep going in the direction it wants to go, or reverse its trend, right? It will retrace, go back up again, retrace again, going down in the direction that it wants to go if it's on a downtrend, or reverse its trend entirely if it wants to change the direction of the trend, right? Let me just delete this. All right, so this is what we're now looking at on 5 o'clock candlestick. And the next thing you want to do is to mark up the high and the low that has been formed within the candlestick. Now, what you need to understand is any candlestick on any time frame that you choose, well, of course not the 1-minute time frame, is a range of a lower time frame, right? So if you choose a 1 hour candlestick time frame, that is a range of what has been happening on these lower time frames, maybe on 5, 10, 15-minute time frame, right? It's the market ranging to form that one candlestick, right? So if I choose a 4 hour, it's a range of the smaller time frame. If I choose a 15-minute time frame, it's a range of what's happening on the 5-minute, the 1-minute candle, and it's just combined into one little candlestick. So this 15-minute candlestick that we are just marking the high and the top, we want to see what has been happening in that range, right, on the lower time time frames. We want to capitalize on that small price movement, right? That particular range is what we want to trade. Then you go to your 5-minute time frame, right? On your 5-minute time frame, you can clearly see that the market has formed a little wick at the bottom of that candlestick, right? And what you're looking for is a, let me just zoom it up so that you can see it a bit clearer, right? So this is the candlestick that we'll be interested in. We want to trade the range, remember, of this particular candle. So we want to see what the next candlestick will do. Obviously, that is what it's actually supposed to do, what you just saw. The next candlestick is actually just supposed to break below the 5 o'clock candle wick that has been formed. So it doesn't matter how many candlesticks it takes before you actually see the setup as a good setup. You have to wait for it to first sweep out that 5 o'clock candlestick on the 5-minute time frame. So what you don't want is this particular candlestick going and closing below that 5 o'clock candlestick on the 5-minute time frame. You want it to always be above it. It should close above it after it has broken the wick below that 5 o'clock candlestick on the 5-minute time frame. Now, I might be saying a lot of things at once. Just make sure that you watch the video slowly and even repeat it if you do not understand exactly what I'm saying, right? So just illustrate this with a little zone right over here. You don't want your candlestick closing like this, right? The candlestick should close inside. It should just wick outside and close inside of that particular candle. Now, this candlestick is what we are now interested in, right? So we're gonna mark it up. Now you can see that the next candle has also attempted to break below, but it failed to break, and it did not also close outside of that zone. But the next candlestick doesn't really matter when it comes to breaking and closing below this one. The only thing we want this particular candlestick to do is to break the high of the candlestick that broke the 5 o'clock candle on the 5-minute time frame. Oof. All right, you understand it soon. Now you can see that it broke the high, indeed broke the high. The next candlestick went and broke the high of this candlestick, right? Now here is when you want to look for your setup. So right after the candlestick has broken out of this zone, you want to come and mark your point of interest. Now this little zone that I'm marking right over here becomes your point of interest, right? So you are saying that if the market comes back into this zone, you want to look for buying positions. So you can put your limit orders right at the beginning of this candle right over here and your stop loss right below, because this is scalping. When I have a tight stop loss, I normally like to use really large lot sizes, and when I have a larger stop loss, I want to reduce my lot sizes, right? And then your take profit can be at the beginning of the candle where we marked it up, but I would always advise to trail your profits with stop loss in entry as the price moves up, because sometimes it can hit that point or sometimes it can just suddenly reverse and take you out. Let's see what the next candlestick just does. You can clearly see that it came back into that zone. There it has triggered my buying limit. You don't have limits, you can just simply enter the trade. You have to be watching it like that. So the next candlestick dropped like that, and then I am going to buy at this spot with my stop loss right in entry like this. No, with my stop loss right about this zone, and I'll be actively monitoring this trade because you want to do that when you are scalping, right? Now let's just see how the trade actually plays out. Near that zone, right? This is like 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes with the trade just running at this zone. I could consider this on the 5-minute time frame a little retracement that whole selling momentum was doing, right? It can retrace to the zone, or even to the zone where it just got out to. Then it just starts dropping with the same momentum that it was dropping with when we started to analyze, right? So at this point, I already want to be trailing my stop loss in profits, maximizing my winning trades and closing partial profits, right? And now let's just see how the market eventually then just played out. As you can see, yes, it was a little retracement and the market continued with the selling momentum and kept dropping and dropping and dropping. Now this movement right over here is what I wanted to scalp and is what I did scalp. If we go on to the 15-minute time frame, you can see that movement is just this little movement, right? It's not even that big. Whereas on the 30-minute time frame, look at that, it's just 2 candlesticks in that thing. On the 1-hour time frame, it's not even any green candlestick. It's so weird, right, that the market can actually move like this. Let me see what it looks like on like the 4-hour time frame. Let me see. Yo, it just looks like a little weak. You see at this zone right over there, that is where our entry was, and it's just a little weak on the 4-hour time frame. So that is how I ended up making $100 on my $100 account in just 30 minutes or so of trading. And I just explained it as simple as I can. I don't know how else I can explain this, but if you go through the video over and over again, you would actually get the concept and also practice it and put it, into practice. So right now what we're just looking at, I know we're going to have CPI. We are currently in a Nasdaq trade. This is like the normal trade in the inner circle. I don't give scalping trades in the inner circle, right? Because those are really high risk trades. And other people might not be fast enough to actually go in and out. So we're currently in a good Nasdaq buy, as you can see right over here. And this was our yesterday's trade, which actually also played out really well. It didn't give us, a lot of movement as I would have wanted it to, but today we came back and capitalized. You can see we're currently in the Nasdaq trade and we're sitting in good profit right over here like this. And also we're having a gold trade, which is still in good profit. I did drop this on the weekly analysis, and I explained, that we're having a retest of the trend line that gold was having right over there. It was the retest of the broken trend line, and right now we're just pushing up to the top, and there's a chance that it might actually break out of the highs at this point, because that zone is really a lot of money just drawing the market to it. And I also know that a lot of people were actually against me with selling gold during the weekly analysis. I was reading all of your comments, and it can be like that sometimes, but what I always suggest is for you to always trust your analysis. If the market is telling me to say I should buy gold, I'm always going to buy gold. It doesn't mean that I cannot take losses. If I do, I will learn from those losses, but I'm just happy that the gold trade is actually moving really smoothly. You might actually just want to look to catching it at the top when it breaks the highs, if it actually then goes up to break the highs. But we have already secured profit in the inner circle. I only have one trade on gold. The rest have been taken out, but this is what my gold trade was actually looking like. You can see that I had a lot of positions. I kept adding and adding and adding until I put my stop loss in entry, and it took out most of my trades when it retraced yesterday. And then right now it just left me with one trade that I'm still holding, and I would want to add positions if it keeps going to the top. Now, to just do a little recap of the scalping strategy to make things a lot easier, what you want to do is to open your chart on the 15-minute time frame when it's 5 o'clock on your time zone. Mark up the high and the low of that particular candlestick. Go to the 5-minute time frame candle, and then look for the candlestick that will break out of the wick of the low, right? Low or high, whatever it is in that particular zone, right? And then that candlestick is now your next focus, right? You want the next candle to break out of that candle. If it does, then you have a really complete setup. Now you only want to wait for the market to come back into that point of interest. Then you're going to buy or sell, and then after that you just have your stop loss below it and ride the trade. Make sure that if you make decent profit, just shift your stop loss into entry, because at the end of the day you are scalping. You don't want to stay in the market, and you also don't want the market to reverse after it has given you profit, right? Only thing about the strategy is you might just want to practice it, go and back test it and see if it actually will work for you. But if you did enjoy this video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. With that, it's been Tino, and I'll see you in the next lit video. Peace.